Hello guys, this is Forte, and in this video we will be introducing two stocks that will be either of high interest to you due to the recent news, either good or bad, but it has a significant movement on the charts. First off, we will go to the AMD. AMD, as we understand, is a global company that develops computer processors and also, as we know, the graphic processors for servers, workstations, personal computers and embedded systems. On the 28th October, it releases the RX 6000 series, which supports 4K resolution performance to AAA gaming. I'm sure if you are into gaming, you know what this product is about. Their main competitor is Intel and Nvidia, and they have to continue research and upgrade their products in order to meet the market needs. Mainly because the games are now highly graphic demanding and consumers just wanted to see better graphics and better speed, and of course they will always want to try to capture customers with graphics and speed. And if you are interested, you can take a look at their website about their new products and what they have and what they can provide and what is the comparison of the 6000 series family. Now look at the fundamentals of this stock. At the first look, we will look at the earnings per share. It is 30 cents. Current ratio is 1.95. Interest coverage is 6.27, all of which is positive. The only thing is the P ratio is on the high side, 103. So which is to us is a bit too expensive. Okay, looking at the chart, we can see now the price is at 75 and it actually hit the support level of 74, 75, and the resistance for the last resistance is at 56, 57 level. One interesting to note is actually released the earnings just on the 26th October. Actually its earning is positive, but it actually goes down. But if you look at the previous earnings, it's actually rallies a lot. So that is why we cannot predict any movement prior to the earnings report. So unless you are an experienced trader, you might want to stick to a safer method on this, because you will never predict what is the movement with the earnings report going to announce, and either it will go up or it goes down. For us, the most recent one, it actually goes down a bit, but we'll never know what is the movement next. So you might ask, how are we going to trade this? It depends. First off, if you don't have this stock and you would like to own it but at a discounted price, you can actually set the put options at 60 level, around here. Remember that each contract is 100 shares and you will need actually 6k capital to prepare if this stock really goes down to the 60 level. And of course, if you have this stock already, you can sell the covered call at around 90 level or even higher. It is to collect any premium while holding this stock. Now, there is a lot of option strategies out there in other causes. It would take a long time to understand which strategy will suit you the most. But right now, we are just introducing the basics of how you can take advantage in the minimal risk of each trade. Now, let me explain what options is about. Now, a call option gives the buyer to buy 100 shares at the strike price before the expiration date. Likewise, the seller of the call option is obligated to sell the stock at the strike price if the option is exercised. The put option gives the buyer the right to sell 100 shares at a strike price before the expiration date. Likewise, the seller of the put option is obligated to purchase the stock at the strike price if exercised. So we will go through a simple illustration of what is buy call, sell call, buy put and sell put. So let's say your company ABC trades at $100 and you buy a call option of 100 shares, strike price 105, premium 10 cents, expiring in 30 days, it will cost you $10 upfront. So at the end of 30 days, if the strike price now trades at $110, the buyer can actually execute to buy the 100 shares at $105. What it means is it will cost him $10,500, and plus the previous premium paid, it actually costs another additional $10. But now the trade price is at $110, so the value of the price is actually $11,000. So the total profit for him is $490. So for sell call options, if he sells the call at a strike price of $105 and a premium of 10 cents expiring in 30 days, he actually collect $10 upfront. And at the end of 30 days, the share price doesn't hit $105. For example, it's now at $90. The options contract expires worthless. So the seller get to keep the $10. At the put options, so if you buy the put options at $95, premium at 10 cents, expiring in 30 days, given that the trade price is at $100 at the time, it actually costs him $10 upfront. And before the end of 30 days, the share price hit $90, the buyer actually can sell the 100 shares at $95. So the buyer will actually receive the value of $9,500, and it actually will cost him $9,000 to buy back the shares because of the contract at $90. So the total profit minus of the initial $10 is actually $490. For the next scenario, if you sell the options at the strike price of $95 at a premium of 10 cents expiring in 30 days, you will receive $10 upfront. So at the end of 30 days, the share price doesn't hit $95. For example, it goes up to $105. The options contract expires worthless, and the sellers will keep the $10 that's received upfront. So of course, we didn't share the scenario of how these strategies will lose the money. But if you are interested to know more, you can contact us at the information below the video. This is just a short introduction, and we hope you have a brief understanding of what options is about. So now we will look into the next stock, which is Apple. Now this is a very interesting stock because it recently announced the release of iPhone 12. And traditionally, people are always anticipating Apple products. This stock will always release upon announcing the new product. But for this year, iPhone 12 was announced on October 13, and there is already a lot of opinions about it. First of all, if you buy the Apple 12, it doesn't come with charger and earpiece. Reason being is they are going to be environmental friendly, and it's also assuming that the buyers is the current users and they have all the accessories with them. But if you look at the product, it's quite amazing because they announced that 5G ready. It supports 5G, and I believe it is the first to develop and announce it. So if you look at the critics here, you will see there's a lot of description and the opinions about it. So if you look at the fundamentals, current price is at $108. Its earning per share is $3.28. Very impressive. But other than that, the rest like PE ratio and debt to equity all on the negative side. So actually we are quite reserved on this stock. Now look at the chart. We see that all the price is actually near its support level, which is 108, 107 level. Its new resistance is around here, 125 around 125, 126, and the previous resistance is actually around 100. Okay, around here. A price level and around here. So if you ask me how to trade this stock, it depends. So if you want to own this stock, you can actually sell put options around here, and then you have to prepare 10k cash in your trading account to prepare the risk of assignment. But if you have this stock already, you can actually sell call at 125 level around here. Whichever most profitable to you, you will still get to collect the premium no matter what trade you will execute. It's entirely up to you. Of course, we are going to the safest method possible, and there are a lot of other market out there to suggest what is the other option strategies you can have regarding various different stocks. Of course, there are for the advanced traders, but if you are the beginners, I believe these are already enough for you to earn at least 10% of the profit. So this is all about our video, and if you are interested, you can find out all about us by pressing the subscribe or like or leave any comments if you like. So see you in the next video.